slow and steady, I guess, is the approach strategy from the bears, as it clearly drags the index down in a very well calibrated slow manner. The benchmark Nifty index lost a little over 100 points in today's trade, creating a lower high, lower low on the daily time frame, bar to bar, and fuels further to the underlying downtrend. What next is left for the week ahead? Well, good evening, traders. Tonight, this is the 15th of December 2021, Wednesday, midweek, mid-month, 8:45 p.m. and we are looking at a chart of the daily Nifty near month futures, and it seems like the bulls are slowly losing grip of the recent bounce back that it managed last week. If you remember, last week's Monday was a fairly strong move down, 281 points, after which Tuesday, Wednesday, Thursday, Friday, it was a pretty good bounce back. But then this week, Monday, Tuesday, and today, Wednesday, it seems like they are losing the grip. The trend was always negative on the daily time frame. The expected resistances were well respected. As you can see, we have this level drawn for, I think, months now. So it's playing out pretty well. 75-minute time frame shows that today's price action was kind of range bound with bias on the downside. The underlying trend on the 75-minute time frame has also rolled down now. Markets have clearly broken below the anchored VWAP. Remember, yesterday I was showing you the anchored VWAP did act as a good support and then resistance, and now it's clearly kept prices further down. So unless 17,400, 450 is taken out, I think we should maintain that view. In fact, 17,400, 450, in fact 17,500 is also an important level. So 400, 500 is the zone where the immediate resistance lies, and any fall from at the current levels, then you should be looking at the psychological 17k mark. The possibility of a retest of 17k surely, slowly, seems like a possibility now. Strategically, there should not be any kind of change to the views that we've been discussing every day. Stay cautious, stay careful, try not to do any long trades. Keep the trades, if you're doing, restricted to intraday or very short time frame. Long-term portfolio building stocks, or if you have any kind of stocks which you like, encouraging enough, start nibbling into them. But a break below 17k and any kind of follow-through weakness can lead to significant downside. We have some levels drawn from our daily time frame, if I'm not mistaken. We have those levels. We know that once 17k is given away, then this wide range where we did notice some good volumes, this should be the, I think, 261.8%. Yes, that's the Fibonacci projection target on the downside. So, but that's a little far-fetched from here. We're looking at close to 1,000 points, but let's not go there right now, but deal with first 17k. Sectors, as you can see on the right hand side, were all negative, barring from CNX Auto, which was marginally positive, still in a downtrend. Not the best of situation, but it was real estate and then media, the counters which actually rallied pretty well last week, are the ones which are slowing down. Same goes for PSU Bank. Bank Nifty continues to underperform, though on a percentage basis it was marginally less negative, but then index also slipped quite a bit. If I take a closer look, in fact, I think the closer look will be much more cleaner on the daily, on the 75-minute time frame. You can see that from a very short term, from the perspective of tomorrow's trade, 37,200 is where we have three tests on the 75-minute time frame, and that's the bare minimum that it needs to take out, or else it's definitely heading further down. The daily chart going back to the daily chart of the Bank Nifty, shows that in this bounce back since the recent low of 29th November, the volumes of Bank Nifty has been pretty well spread throughout this bounce. So we can expect some amount of support to come in from the Bank Nifty, if at all. But overall, the trend is down. To go with the trend of the market, it is for the Nifty and the Bank Nifty both down. As we record this video, taking a look at the global markets, the SGX Nifty is down 66 odd points, 17,185. The S&P 500 is also down, not much, 12 points. And the Dow Jones Industrial down close to 0.5%, 120 points. These global markets too, after the recent bounce back, seems like slowing down. Amongst the top stocks, which makes up the Nifty 50, ITC, TCS, HCL Tech, Tata Steel were the biggest losers. In fact, ITC gave away quite sharp in the last two sessions, and it was Sun Pharma which was a surprise move, bouncing back from its intraday lows, but still in a downtrend. Kotak Bank, after the recent sell-off, is trying to slow down. Not a very pretty picture, like a bullish Harami pattern. Can give you a bounce. We'll take a look at it whether it comes in our scans, but nothing dramatic, nothing, not any particular stock that stands out showing that I was the strongest sector or the strongest stock. Reliance Industries clearly, very slowly dropping further down, and yeah, it seems like the possibility of sub 2300 is highly likely for this index heavyweight. Let's quickly get the scan done. Iris Plus, though I wouldn't recommend to create any fresh positions aggressively. You can go with positions which way the degree of confidence and conviction is relatively higher. So the InstaView scanner on the Iris Plus will scan on the Nifty 200. The inside bars, we would look for small range bars. AB Capital is the first one, and seems like I have a slight issue with the TeamViewer connection. Okay, now it picks up. AB Capital is an inside bar, had extended rally, nothing promising. Hindalco, yes, the degree of contraction has been for the last 2 days, maybe above the high, maybe. iBank just slowing down. Ashok Leyland can lead to some weakness below the recent lows. UBL, same story, below the recent lows. DLF will try to consolidate, doesn't look like a very good breakout candidate. McDowell is hovering, it's given that short-term bounce back. Adani Enterprise, and then we have Tata Steel. In fact, of all the names that we clicked in inside bar, Tata Steel is one stock. If it gives away today's low, 1149, 1147, 1149, seems like a prospective candidate on the downside. The bullish and the bearish Harami pattern, Ashok Leyland is not a bullish because not enough downtrend. I'll quickly click through them and stop where I feel it's a prospective bearish or bullish. Hindalco looks like a decent bearish Harami pattern. We just saw it was an inside bar, of course. Decent sized uptrend, a shooting star kind of a behavior on Monday, and then after today's close. So we've got two bearish pattern back to back. So sub 456 on the cash market, Hindalco is a possibility. Similar kind of a behavior on ICICI Bank daily chart also. If you look a couple of days back, you had an engulfing kind of a behavior here, and now you have a bearish Harami pattern as well. So Hindalco still looks a little better off. iBank has been a relative outperformer from the private bankers. Kotak Bank is a bullish engulfing. Yes, indeed it is, though the body of the second bar is relatively larger in relation to the first one. Should have been smaller. Not the best of Harami patterns. MRF, no. And I'll quickly scan through and stop if I find something worthwhile. Let's look like, yeah, this looks good. Tata Consumer looks pretty nice, downtrend, beautiful bullish Harami pattern actually. Range contraction over the last 2 days, high of 750.5. This looks a decent candidate, and so does Castrol India. A pretty good bullish Rami pattern. So Castrol, Tata Consumer, and I think Hindalco would be the filtered out bullish and bearish Rami patterns. Before I scan through the breakouts, I'll quickly take a look at the delivery percentage. 1 lakh shares. Don't want to populate the list unnecessarily. Would like to go for those stocks which are liquid enough and has seen pretty good delivery percentage. Nifty 200, not 100 process, and we get DMart and TCS. DMart consolidating, clear range consolidation, but if you take a look at the last 4 days, it's just today that it's 73%. Rest 49, 48, 35, 34, 42, nothing much. TCS on the other hand has picked up a little bit of delivery percentage over the last 3 days, 70, 69, 71, still consolidating in recent short-term trend reversal. Ascending kind of a triangular pattern. If you see, it's stuck. It's got to either take out the breakout level on the upside, or it can probably lose its ground and show weakness on the downside. Weekly charts are also showing that thing. So not the best in terms of delivery percentage, both from TCS or DMart in today's scan. Breakouts, McDowell maybe, but market needs to support. Amongst the rest, I'm primarily focusing on the upside breakout. Biocon, after this big move that we saw on the 8th of this month, after that it has gone sideways. So any kind of movement above this 383 mark can be a breakout candidate. So is Torrent Pharma. Both the highs are exactly the same, almost 3166, 3164. So 3166 is a clear breakout level. If the market sustain, if the stock picks up some momentum, then possible. Or else this is not the best of markets to chase positive breakouts, honestly, considering the way the prices have behaved. In terms of Oracle, Ashok Leyland, not really. AV Capital, no. Dixon looks a little bit promising above today's high, 59.60. And then we spoke about Tata Consumer also. That looks good. Amongst the Oracle shorts, no. This looks interesting. Aarti Industries below today's low. Dupin definitely not. DV Slab, no. So that's the scan results. We've been getting some names at least to work on from a short-term perspective, and that stays like the case. But considering how the markets have fared and looking at the global markets today evening, I think it will be prudent to stay a little low profile and see whether we see follow through selling for the rest of this week or not. As I was mentioning recently, the evidences are far more prominent. The evidences are far more in favor of weakness, right? So 2 more days to go for this week, and let's see, as I always say, let's see what's in store for the market. Till then, take care of yourselves, trade well and trade wise.